Welcome back. So jewelry companies are in focus. Even today, you've got names like a Titan, which are holding up in the green. Yesterday, we were chatting with the management of Senco, where they said they're also positively surprised by the kind of demand that we've seen in the early part of September. And not to forget, P.N. Gadgil's large 1,100 crore IPO in terms of an issue size, which is a combination of fresh issue of 850 and an offer for sale of 250 crore, also opens up. Not just that, you also had a CRISIL note where yesterday the company said that the revenues of the organized gold jewelry retailers will increase by 22 to 25% this year, a good 500 to 600 basis points more than the 17 to 19% that they were earlier anticipating. And this is following the sharp reduction in import duty announced in the budget. Rahul Guha, the director at CRISIL Ratings, is now joining in. Rahul, morning. Thank you for joining in. This is Reema here. Take us through what your analysis has thrown up. Why have you upgraded your assessment of growth for the gold retailers?
Hey, hi, Reema. Thanks for having me on the show. What we're trying to say is, for the first time, we are seeing volumetric growth to happen in this particular sector. Now, if I just take you back in time from the year 2019 to say 2024, the volumes were largely flattish. They were less than 600 metric tons at all point in time, almost at about 580 odd metric tons for a fairly long time. I'm keeping aside the COVID years because in COVID, they had fallen to somewhere as low as 400 metric tons in those 2 years. Now, for the first time, we are seeing that the volumetric growth here from 580 odd metric tons will cross 600 in the last 5-6 years. At about 610 is the projected number that we are looking at for the organized segment. And correspondingly, if I look at the prices, they have remained firm. On a YOY basis, we see that last year the average was somewhere around 60 to 63,000 odd per 10 grams. The price that we'll be quoting on an average for this year will be in the range of 73 to 74,000 rupees per 10 grams. Now, if I do the maths here, that somewhere translates into 22 to 25% industry growth in terms of revenues on a YOY basis for fiscal 25.
And this is after speaking to how many jewelers? Tell us a little bit more about the survey. And again, just break up that 22 to 25% revenue growth in terms of volumes and price increase.
Sure.
What will be the volume? Yeah.
Sure. So the overall industry, if I look at in terms of organized plus unorganized, that will be somewhere in the range of 8 to 9 trillion INR. And the organized would be somewhere in the range of 35 to 40% of this particular industry. CRISIL has a portfolio of about 58 companies in this organized space that contributes almost a third of the revenues of the organized industry. So that's the kind of database that I'm talking of, through which we have derived this particular analysis. On the volume front, as I said, we expect the number to move from about 580 metric tons to somewhere in the range of 600 to 610 metric tons. So somewhere 4 to 5% kind of a jump is what we are seeing YOY. And on the realization side, the average cost was somewhere in the range of 62 to 63,000 for the last fiscal. Against that, we anticipate about 18 to 19% kind of a average being on the higher side at about, say, 74, 75,000 rupees per 10 grams. So net, this will translate to 4 to 5% on the volume and 18 to 19% on the value, corresponding to somewhere around 22 to 25% consolidated for the overall industry revenues.
Okay. You know, Rahul, you are talking about 18 to 19% value growth. So that's a big pricing growth and something that we've seen from the day the duty cut was announced till now also. We are around 75,000, right? So are we expecting a further up move by the end of the year as well? And do you think by then we'll see some impact on demand? What are the conversations suggesting? And is it different for the unorganized space? Because the organized space seems to be doing really well. What are the trends in the unorganized space?
Maybe I'll take the question on the demand side that you're talking of, or the pricing that we are looking at. So I think at a CRISIL level, basis our analysis, we understand that the price would stabilize in the 75,000 rupees range for the rest of the year. There will be an upside over the next fiscal where the prices could range between 76 to 80,000 odd rupees per 10 grams. 24 carat is what we are forecasting. That's on the pricing side. On the volume side, we will also have to understand one particular aspect, that in the H1 of this particular year, we had lesser number of auspicious days. So these were just about 17, 18 auspicious days, as against if I look at an average of H1 for the last 5-6 years, this number would have been somewhere in the range of 30-35. So it's almost half. The second half, we do have a significant number of auspicious days, plus the festive season kicks in along with the wedding season. So that's going to drive this 4 to 5% kind of a volumetric growth. As far as the unorganized segment is concerned, we need to understand that at some point in time, maybe 5-6 years ago, if I look at the unorganized was at almost 65-70% of the overall industry, and the organized was at about, say, 25-30%. Right now, what we understand is the organized will be somewhere close to 35 to 40%. And probably by the year 27-28, this ratio could be in the range of 50 to 50. 50% organized and 50% unorganized. So in a way, we can say that the organized are growing at the expense of the unorganized players across cities. So that's how it's been.
Okay, so organized are growing at the cost of unorganized players in the jewelry sector. Inventory losses, how does that pan out in this case? Because there have been some duty cuts and it impacts the inventory number as well.
So the inventory policy of most of the organized players is pretty well taken care of. They don't stock up too much of an inventory. So whatever I'm selling, I will typically procure the very next day. Now, what had happened during this particular duty cut, if I recollect, 24th of July is when this duty cut was announced. Suddenly, the prices, they crashed by almost 4,500-5,000 odd rupees per 10 grams. Now, that would have led to some bit of an inventory loss. But the fact that the ability of these players to pass on some of these to the end customer will somewhere curtail that inventory loss. It's not going to be a huge inventory loss. But yes, there's going to be 20 to 30 bips kind of a fall that will happen because of this sharp prices, that the prices that came down so sharply over on the 24th of July. So that's how it's going to look like on the inventory loss side for the players.
So Rahul, when you spoke to all these 58 companies, what else did they tell you in terms of their expansion plans, in terms of whether this 4 to 5% volume growth, which we've not seen for the last so many years? Volumes have been flat, as you said, for the last many years. Is this something which is sustainable? What else did your conversations cover apart from this year and, the inventory picture?
So I think we have to also understand gold has continued to remain as a very steady asset class. And today, if I look at all the global trends or the global macros, there is some amount of market volatility that is prevailing. Plus, there is a lot of uncertainty that is around the geopolitical tensions that we are seeing. So from that aspect, gold definitely has come across as a very steady and a strong asset class. That also, in a way, if you look at the prices have moved from almost 31,000 rupees in 2018 to more than 74,000 in 2024. So you have to understand the prices have more than doubled in the last 5 to 6 years. But in spite of that, the volumes are now picking up over the last couple of years and expected to remain 4 to 5% on the upside over the next couple of years. So as an asset class, I think gold is doing really well. That's continuing to drive the demand. Coming to the capex, I think most of the players are pretty bullish on the market sentiments or the demand side scenario that we are seeing. On the CRISIL portfolio, if I have to specifically look at, we are talking of almost 12 to 15% kind of an asset base expansion, which will tantamount to somewhere around 180 to 200 stores for the CRISIL portfolio, which if I extrapolate for the industry, we can look at almost 600 to 700 stores being put up by the organized segment during this fiscal.
Okay. All right. Rahul, thank you so much for joining us with the analysis, a deep dive into what's happening with the jewelry sector and the duty cuts and the impact thereof on the organized and the unorganized space. Look forward to speaking to you yet again once the festive season kicks in and we see more deeper demand trends coming in. Time for a short break now. We'll get you more on the markets on the other side. Stay tuned for that.